Good morning, everyone. Welcome to the On Time On Target Morning Brief. Again, we're coming to you live from Orange Beach, Alabama, where you can see behind me the ocean out there. And also this morning, we received a special treat from the Blues, which are doing some practice, the Blue Angels, which are doing a practice run up and down the beach. So I'm going to chop that clip in there as well. We got a special show for you today. Obviously, you've heard that Apple has released that they're going to get into the autonomous driving business, so we're calling that the iCar move. I don't know if it'll officially be called the iCar or not, but Apple started Project Titan in 2014 where they hired a bunch of car engineers, and so people thought that the iCar would already be here by now. People thought that Apple might actually even buy Tesla by now. They didn't, and now they can't because Tesla's gotten too big. But pretty exciting for the company to see what they come up with. Again, it won't be right around the corner, probably 2024 they're saying, before they actually field their car. But you know, Apple's in the car business now. So with that. All right, good morning, everyone. Welcome to the On Time On Target Morning Brief today, Tuesday, December 22nd. Got a lot of good stuff to cover today, especially the announcement of the iCar from Apple last night. So we're going to dig into, some of the history on that, which is Project Titan all the way back to 2014. So we'll talk about that, as well as, vehicles tend to be low margin sort of things. So it hasn't affected Tesla, but it certainly has affected every other car maker out there. So kind of mixed reviews. The stock is up this morning, which we're thrilled about because we own a ton of it. But long term, is this a good or bad thing for Apple? So we'll kind of peel that back. And again, this is not really focused on a retail car. This is focused on more of a self-driving car, autonomous taxis, that sort of thing, than necessarily, throwing one in your driveway. So we'll take a look at all that stuff, as well as some other things that are in the news today. Make sure that you have your chat room set up and your Q&A window set up with all attendees selected. I've also posted today's trades in there. I like the shorts better than the longs. But we'll peel those back here in a little bit. Standard disclaimer applies with this financial education presentation, so you must do your own due diligence before act upon anything you hear this morning. Full disclaimer information is available at OTOTnow.com. All right, our mission objectives for today: we're going to grow our money, protect our money, and live off our money. Specifically talking about growing our money. Apple, even though we've been in it for well over a decade for many of us. For those who've been with me long term, this is probably the first stock you saw show up in your account several years ago or yesterday. I'm still a buyer here because it's just the best out there as far as the all-around company that you can find, and fantastic leadership with Tim Cook and his leadership team. So we'll talk about the iCar today and some of the margin stuff there. As far as the question of the day, I'm going to talk about what are stock buybacks. Yesterday's announcement from I believe is the SEC, said that bank stocks can buy back some of their stocks. That led to JP Morgan going back higher. That's one of the reasons I've stayed clear of the bank stocks, is because they're not allowed to buy their stock back, which is another way to boost stock prices. You just start retiring stock off the market. Every other share of stock that's out there is now, a little bit worth a little bit more as far as the total share of the ownership of the company. So therefore, it's a huge boon to stocks, and Apple's been buying back its stock for years, and that's one thing that's led to the stock price going so much higher. All right, our flow for today is going to be long, short, open, short, long, which means we're going to talk about the market review. where the S&P has been, where it's going. Well, only a few trading days before now in the end of the year. So kind of like my prediction on what's going to happen there, and then on into 2021. We'll take a look at the headline reviews, mostly dominated primarily on the second strain of COVID that's starting to be released, and will the vaccines actually apply to that as well and mitigate/eliminate that. So that's what we'll talk about during the headline stuff. Our long-term investments primarily talk about Apple. We are also talking about the two LiDAR companies that are out there that help cars do the deconfliction. One of which you may know, that's Luminar. That's been on fire lately. Laser. Been talking about it for some time now. The secondary of that is VLDR. If you don't have shares of that, you can pick up shares of that. It hasn't run up quite as much as Laser has. Short-term trades, you can see the chat there. I have several longs you can take, but I'm really more interested in the shorts. BCRX lost its funding for a COVID-19 vaccine, so that stock is cratering. That's going to be primary. And then Fitbit getting bought by Alphabet. That got blocked in Australia, which is kind of minor in the big, still a continent, but kind of minor in the big scheme. But certainly the fact that Australia went out and blocked that merger put some pressure on the US and Europe, and maybe they should think about blocking it as well. So anyhow, Fitbit selling off pretty hard. Okay, let's go ahead and take a look at the market overview. Going over to TD Ameritrade ThinkPike's platform. This is the S&P 500 that we're looking at from left and right. That's about a 9-month chart. So we don't have the big sell-off in March anymore depicted. We just have kind of the run up, and almost looks like a straight line from the recovery. It really wasn't. There's some congestion here going into the election, but since the election has been pretty much a straight move up. And you see yesterday we gapped down significantly, ended up as a green candlestick. So what that really means, let's go ahead and take a look at it on the 5-day chart, is here was that big gap down, was this light blue area here, and then we started down yesterday during the dark blue area, and then kind of came back all day long. Sold off a little bit into the close, and then sideways. We could be seeing some of the people taking the Christmas break off. Thursday's a half day, and then Friday's off for Christmas. So people are also distracted by their real life during this time. So I think we might see not any huge moves going into the Christmas for the rest of the week. So could be nice and flat today, which would be low volatility. We like that. Okay, here are the two charts I have set up. We're looking at Apple and Laser here. Those are both logs. I'll set those up for the shorts once we get back over to the day trading portion of the show. All right, let's check out the futures. Going over to CNBC.com now to take a look at where we are. Let me refresh this real quick. And you can see the Dow is barely in the red. The other two in the green. Again, the NASDAQ up 0.4%. So tech kind of leading the way for the market open today. As far as going around the world, Europe in the green across the board. So that has obviously a positive impact on us since their markets are still open right now. Asia in the red across the board. So kind of counterbalancing that. Here are our numbers from yesterday. The Dow did crawl its way back into the green. S&P down again, largely, don't forget Tesla's in the S&P right now as of yesterday. And Tesla was off, I think, 6%. And while we're kind of talking about Tesla, is a lot of folks said that entering the S&P 500 will be kind of the end of this crazy Tesla run in the stock. And I tend to believe that because you had the stock split, you've had the now it's into the S&P 500, so that's legitimized. It's profitable now, and it's as big as all the other car makers combined, which defies logic. So that's kind of the beginning of the end when you start, what's left to drive this thing higher. Elon Musk had a big weekend of, I would imagine, partying with some of the tweets he was sending out. So, those are several signs that Tesla's at a top. So it sold off yesterday. Also, you got one of the biggest companies in the world, Apple, coming out with a self-driving car, which is a direct competitor to some of the future themes that Tesla is kind of the leader on. And we'll get into that here in a second. But that's not a good sign for this Tesla craze that's been going on. So that could take the S&P down even more if Tesla continues to sell off. So right? Okay, bonds have not moved a whole lot. Oil still stable up at 47, even though it sold off a little bit yesterday. Not much movement in the precious metals. Bitcoin's been kind of all over the map. It sold off pretty hard yesterday, and now it's back up this morning up to 24,000. So obviously Elon Musk took some shots at Bitcoin and Bitcoin holders this weekend, but you're also seeing some legitimization from other folks talking favorably about it. Of note out this morning was an article about the SEC is finding Ripple, which is one of the other coins out there, XRP, if you will. Finding them, I think, is $58 million. So for defrauding their investors. So if that kind of ripples, if you will, through the alternative, the coin space, if you will, you can see those names selling off today. So we shall see. All right, let's get back to the headlines. Refresh again real quick. The banner there, that 737 Max, it is, it's back on for Boeing. Obviously, you saw Boeing dip below 100. It's up to around 230 now. I'm not worried about Boeing long term. So if anything, that was the buying opportunity of justice, and you're up, 100% on the shares you picked up, 7-8 months ago. So is it a buy here? Not necessarily, but certainly you don't have to worry about Boeing long term. I tend not to sell companies like that. Goldman's coming out with a robo at 0.15%. They are like way late to the robo game because there's all kinds of, everybody else out there offers a robo solution. So if you're into that, then now Goldman's trying to catch up. They're 5 years behind everybody else that's a lot more nimble. Apple up 3% this morning. The relief bill passed. Still hadn't been signed by the president, but I don't think there will be any objections to it as it goes forward. This is probably the biggest news overnight. About the BioNTech CEO said that the vaccine is likely to work on the variant as well. That the variant, from what they know so far, which again is probably not a tremendous amount, but from what they know so far, they think it'll cover both. Of course, the CEO behind the vaccine would think that. Let's have an independent third party kind of start saying the same thing before we really believe that. So we shall see. Peloton brought Precor, which I'm not familiar with Precor, but they make a lot of the equipment. So it's kind of in-house, bringing their supply chain in-house. So Peloton's up 9%. That's something you could take along here. I'm not interested in it myself per se, but you could. Here's XRP getting sued by the SEC. We just talked about that. And that could be the beginning of, Ripple's kind of, I would say, the second best. I'd say third, really. If you look at the hierarchy of the Bitcoin, the cryptocurrencies, you have Bitcoin, which is a huge player. Then you have Ethereum and Ripple kind of as the next two. And then you have all kinds of like 5,000 altcoins out there, which if you invest in, I think you're personally taking way too much risk for the potential reward. But we'll see. We'll see if the SEC gets, their claws into all of them before too long. Here's the Tesla headline about possibly being in a bubble. I think they've been in a bubble for a year, but I've been wrong, so stop talking about it. Okay, about the stimulus checks going out for those that qualify. Again, married couples below 150,000, and so if you got the last check, you're likely to get this check. Is what the situation is there. All right, Predator's comment about labels with Precor. So yeah, bringing basically supply chain in-house. So that's always pretty smart because that way you don't have to pay their prices. You're paying your own prices out there. Okay, let's switch to our long-term topic of the day, which is Apple. So we're going to look at Apple stock, the chart on FinViz. So this was the run-up from basically the March lows, which is way back here on the left, if you can see my cursor here. So lower left of the chart, that's down at what, $60. That's pre-split. That's a post-split adjusted price of the stock when it was pre-split. What was it, 4 for 1, I think. Anyhow, ran up in here. Here's your split that happened all the way to the peak of 138. Kind of sold off after the split because stocks tend to do that, and then now it's fighting its way back. So I think it's undervalued here. I think it's a great long-term hold. Enough about that. So let's talk about this iCar thing. So it started back in 2014, and I do remember when the news blip came out of there was a Project Titan, and Apple hired basically 150 car engineers, and everybody got all excited that they're going to revolutionize the car industry. Well, obviously this thing's been going on, and if there's anything that Apple gets right, which of course I think there's a lot of things they get right, is they don't release something until it's ready. So, and they don't talk about it a lot either, which leads to a lot of anticipation because there's not a lot known about it. So the same thing with the iCar, you're likely not to hear much, and they will leak just enough to keep people interested. Or if the news cycle goes negative on them, they'll start to leak a little bit of positive news. So they're pretty smart about what they leak out. But they're really looking at a self-driving, that autonomous vehicle thing. So when you think about the future of vehicles, the younger generation already isn't as apt to buy cars as those of us that are somewhat old are, right? So that, they're very expensive. You have to insure them, you have to maintain them. And it's kind of like with the Uber and Lyft generation. They're like, why would I do all of that if I just need to get from A to B? When I could take a motorized scooter, I could take a bicycle, or I could have my own car, or I could Uber or Lyft everywhere. Who cares how I get there? My generation kind of cares how we get there. It's a status symbol. What's parked in your driveway? Well, you could argue whether that's right or wrong, but it just is. And that's very different. So if we fast forward 20 years, maybe nobody owns cars. There's these autonomous fleets out there that don't really even look like normal vehicles do. And the movies have done a pretty good job of showing you what that would look like. But if it kind of devolves to just a transportation system / network, I mean, nobody cares what color their subway is or what color the airplane is they fly on. So there's a lot of these things for sheer transportation we don't care about at all, but for some reason we still do with cars. And Tesla, that's kind of where they were going. They're like, okay, I'll make these awesome cars that go in your driveways. But really, when you look at Elon Musk and looking at, going to Mars and the Boring Company that goes underground for travel, I mean, they're kind of rethinking transportation. I think the car may turn out to be a dinosaur. And I love cars, so it kind of pains me to say that. But I do really think that is the future. And if Apple figures that out, they're going to be a direct competitor to whatever Tesla comes up with. And there was talk back when they hired these engineers that they should have just outright bought Tesla, and they couldn't afford to now, but they certainly could have back then. So it's interesting the way I think about that. I do see the chat blowing up there. Major. Yeah, internal combustion. I'm there with you. We're very like-minded. Yeah, the freedom. Yep, I get that, fellas. But I do think that, if you could pull out your phone. I mean, if you've seen one of your buddies drive their Tesla with their phone, I mean, that's somewhat unique, right? The summon feature. I don't know. Does it need to be yours, or can it just be one that's available? We'll see. The folks that are chiming in are kind of around the same age as me. So if some of the younger folks want to chime in, if you're brave enough, I'd appreciate that. Kind of with your thoughts. I know you guys are kind of quiet, and that's okay. I want you guys to sit back and learn, but feel free to express your opinions and add color to this as well. If you're comfortable. So, yeah. The horse is pretty important. I think it's a good analogy there, Predator. Okay, so when you really look at, where's the stock been? Stock's obviously been on the move. If you want to look at the internal components, I want to show you laser here. This is Luminar. If you're not in it, it's hard to be in it after its 20% move yesterday. So that kind of, to me, that kind of marked the beginning of the end. After it cratered back here, I started buying. I bought some yesterday morning, and then off it went. So it's like, you got to give it a break now. And then LVDR. And I always blank on the name of their company, so I have to look. And did I write it down right? VLDR. That's can't even get the ticker right. So let alone the. So there's their stock, Velodyne. Excuse me. Same sort of thing. If you have it, great. If you don't, I'm not sure I'd buy it here. I'd wait for a market sell-off, and you might have to wait into next year before we get it. But yeah, these are great companies to own. This is very similar to owning, like when GoPro was hot, owning the chip maker, which is Ambarella for it. So you're kind of owning the derivative play here as, because Apple's run up too much. But as far as Apple, and, of course, you look at the Tesla stock, since we have just 2 seconds here before we switch into the day trading stuff. Tesla stock, sold off 6% yesterday. It would have to sell off into the probably below 300 down to 200 before I would even find it interesting. But that's me. And will it actually do that? I don't know. Elon Musk is obviously a very powerful individual. And so you learn not to try to battle against powerful individuals, or at least that's what I've learned in 2020. Leave Tesla alone, let it do its thing. Okay, let's switch over to our day trading platform. We need to do some housekeeping to get set up here. So we're going to take a look at BCRX. Again, this is a bio firm that it's got its funding pulled. So that's what you're seeing there. And then Fitbit is the not failed, but a blocked acquisition, at least from Australia, had rejected the merger. So that's obviously could have some negative impact. When you look at price points, both of these about a 10 cent stop price. So since they're below $10, so they're kind of heart of the envelope where you can take an absolute ton of these shares, but just realize you need to manage the risk that you're taking there. All right, give me a second to get my charts set up and we will be ready to go. Hey, good morning, everyone. Welcome to the On Time On Target play of the day. We have 30 seconds to the market open. You have 3 screens in front of you on the TD Ameritrade ThinkPipes platform. On the far left, you have the SPY, which is the S&P 500 1-minute chart. We're going to zoom in on that a little bit here. And then we have 2 shorts coming up. So I'll draw the arrows so you don't get confused on which way we're taking these. Both of these are shorts for BCRX, which is a bio firm, which has got its funding pulled for a COVID vaccine yesterday. So there's the opening bell. That's why it's selling off. And then, of course, we're taking Fitbit due to its blocked merger by Australia. So we're going to hop in here pretty quick on BCRX to the downside. We'll zoom in some. Really looking to get it as high as possible. But if we get 7, we're going to have to use a 15-cent stop if we get it here at 740. You don't see anything moving on the screen, so it always makes me question whether this is live or not. So what is going on? SPY is not moving, so this is frozen. Obviously, can't trade if things are frozen. What can I do to wake this up? The platform's not frozen, but they certainly aren't reflecting accurately. So if you do have one that's reflecting accurately, I'm looking at 740 as an entry point and 755. Okay, we're back in the game again. So again, looking at 740, we're going to walk that up here a little bit. Okay, this is hung up twice, so I'm not trading. I'm not going to call trade today based on the fact this is hung up twice. But I would have called. We'll see if it ends up working. I wanted a 740 entry with a 755 stop up there, so that's 15 cents. So you take 745, 740. That's all the way down to first R. Basically 15 cents times 45, so exit point of 695. So if you happen to get in this, obviously my screen's frozen. If you happen to get in it around the 740 point, again, exit above the high of the day at 755 and you're out, take your loss. And if you want to hold on to it, then hold it to the 3-hour point, which again is 695. So it's kind of all I can talk about there because my screens are not working, which is unsat. So see what I can do later today to fix that. Okay, let's look at we'll back out of the day trading mode and look into the overall market. What's going on? FireEye's up 7%. They sold off pretty hard due to that getting hacked, right? So cybersecurity firm getting hacked, so it was on the way down. It's kind of bounced back up and gotten some of its mojo back, if you will. You have Laser, we talked about earlier, being Luminar up 6%. TTCF, I believe, is a psychedelic name. LCA, again, that's the merger. They were supposed to go become Golden Nugget Online Gaming last month, and they still haven't yet, but so it sold off hard, so it's kind of bouncing back up. Luckin, if you want to look at an interesting story, if you've been following along, it sold off pretty good yesterday. Looks like we're not going to get the chart here, but kind of let's see if it populates while we're talking about. Again, the Luckin story, Chinese coffee firm, up at $50 early in the year, came out for fraud, got booted off the exchange, stock dropped from 51 down to $1. Of course, that was the opportunity to buy if you had the stomach for it. Most people were thinking it was going to go under. So, buying in between the $1 and $2 range was kind of a no-brainer. It touched 10. So that was obviously Friday afternoon where it touched 10 and sold off back into the 8. So I think it's fine here. I'm not interested really. It's a selling until it gets closer to 20. But that's what I'm holding out for. If you take some profits here, you can shave off a little bit or, take your capital back out and then your house money at that point. So that's how you should play Luckin, in my opinion. We got Workhorse still waiting on the U.S. Postal Service contract. Obviously, if that happens, that stock will go up huge. If it doesn't, then beware of a sell-off. Q-Clean is one of the funds I've been putting folks in. So if it's been kind of creeping up inside of Q-Clean, which is, again, is a clean energy fund, you're looking at things like Tesla's in there, of course, and it's going to have all the self-driving stuff. It's probably even has Apple in it. I would have to check that out. But certainly it could now if they're getting into, you know, self-driving electric vehicles. Okay, let's look at the downside and what's going down today. You got Clickstream selling off around 12%. Again, that's a penny stock, so that's not uncommon for it to move 10% a day. I don't really recommend that for anybody. I have some of it, and I probably shouldn't, but I'm holding off for to kind of hear the end of the story. That company has an app out there that allows people to participate and earn money, and I don't know, sounds good in theory, but nothing that has tried to do that has actually survived before. Northwest Bio selling off a little bit. Alibaba, I'll talk about that a little bit. It's down 1% here, so it's clearly down below 260. It's still pretty much the best, the highest upside stock in the market. So literally when I have spare dollars, I'm buying Alibaba. Again, it's the Chinese equivalent to Google. It is run into, they were going to spin off Ant Financial, and that got blocked by their own government. So that's why the stock has dropped from 300 to 260 or lower. So again, I think any buying you do between this 250 to 260 range, you're going to look in the rearview mirror and go, boy, that was smart. So that's how I would play the Alibaba thing. However, could be wrong, right? It could continue down, or there could be bigger issues under the surface that aren't coming out there. Okay. You see some other bigger names kind of selling off. You got Facebook, Visa, Intel just kind of selling off slightly today. I'm not really worried about those. JP Morgan selling off slightly as well. All right, let's check back to our charts and see if they've woken up. That went against us, so didn't take the trade in there, but it would not have worked in this biotech firm anyway. And it looks like Fitbit didn't work either. So, all right, well, I'll take a look at my charts and try to figure out why they're not working today and troubleshoot that, so we'll be all ready to go for tomorrow. So again, to conclude, let's go back to CNBC and leave you with the question of the day, which is, what are stock buybacks? So again, we talked about it a little bit earlier, but it's basically a company, when they have extra cash on their balance sheet, they can do two things. Well, they can do several things. So let's cover the several things. They can let it sit there, but cash sitting obviously is a negative. It should be put to work somehow. So they can pay out a dividend, which is a long-term commitment. That's like getting married. When they increase the dividend, now you can't turn around and decrease it really without upsetting millions of shareholders. So you have to tread very lightly when you increase your dividend. Or you could actually buy back your stock, which is a very low commitment to go out there and just basically buy. If your stock's at $10 and you have $1 million there, you can buy back 100,000 shares if I did the math right, and basically retire those. So they buy them on the open market and then they retire those QSIPs, and that reduces the overall pool of stocks that are outstanding, shares that are outstanding. So you as a shareholder, when you are a shareholder of a company that is buying back its stock, every time they do that, or they commit funds to do that, your shares are iteratively worth a little bit more. We're talking fractions of pennies, but when they buy, when they retire 100,000 or 1 million shares, that really adds up. So whenever you have a company that's buying back shares, then that is a net positive for the stock. The opposite of that is obviously if they're issuing new shares, that's diluting your position. So if a company, which is like the thing to do, it's financial engineering at its best, and I can't stand it, but when companies are growing, they issue new shares of stock, which devalues the one that you're already holding. So generally, they wait for the stock price to be on fire to do that before they issue those new shares. But that's what they do, and that obviously can have a negative effect on the stock price. So, all right, that's all I've got for today. Thanks so much for listening in. We'll be back with you tomorrow morning. Have a good one. Bye.